Welcome back to the Stock Market Options Trading Podcast. I'm your host, Eric O'Rourke. And guess what? This is episode 150. We've been doing this show for a few years, and I can't believe we're at 150 episodes. And to do something special to sort of celebrate and keep the podcast going, we're going to start doing some video podcasts. So if you are listening to this episode over on Apple, Spotify, or whatever your favorite podcast player is, I'm going to put a link in the description to the YouTube version because I am recording this with my face and the screen and the charts and everything on YouTube, so you can help visualize all the things that we talk about in this episode. Now, if you're watching this on YouTube right now, guess what? There's 149 other episodes of this podcast over on or just audio over on Apple and Spotify and other podcast players. So if you want to get caught up, or you want to learn some of the educational things, some of the guests I've had on the show, definitely go check out the Stock Market Options Trading Podcast over on Apple, Spotify, as well as the Stock Market Options Trading Podcast here on YouTube. All right, now that we have a little bit of housekeeping out of the way, I did decide, because it's our first video podcast, I'm going to wear a red shirt today. And the reason I'm wearing a red shirt is because on Monday, May 5th, I'm recording this, the market's open, and we are down 31 points on the S&P 500. Now, not to worry, as you probably know, we've had a historic run. I think the market's closed up 9 days in a row as of last week, which is some kind of record. I believe I saw that the market, at the last time we had a 9-day win streak was like November of 2004. So some kind of 20-year kind of record here. And that's great for the bulls, but I think we had a record on the way down, and we're looking at the chart of SPX right now, and we are about back to where Liberation Day is. We're trading just underneath about 5650 to 5700. We did have obviously a correction based on the back of tariffs and trade war and that type of thing. Inflation is coming down, but the tariff is really kind of spooking the markets. And we've had this historic rally on the back of the news that the tariffs may be a little bit less than reported, or less than sort of fear-mongered into us over the last few weeks. And so we are getting a pretty historic rebound. I didn't do an episode last week. I was traveling and then I was sick. But one of the things we've been talking about, or I've been talking about, and I've been trading, is Iron Condors. And I wanted to talk a little bit about one of the Iron Condors I was in. We had done a few of those a few weeks in a row. They worked out pretty well. But with this 9-day win streak, it started to kind of blow through the upside of my Iron Condor. And what you're looking at on the chart now is what I ended up with. And basically what I did was when you're in an Iron Condor, a lot of people think you're, the term delta neutral, meaning you make money if the stock doesn't move, right? Well, the stock always moves. And if you're in an Iron Condor, chances are, if you get any sort of significant move early in the trade, you're going to be down in the trade. You're constantly staring at maybe a small loss in one of these trades. But what happens is when and I'm trading SPX, when SPX kind of moves up towards my short strike as we started to rally last week, what we did was we closed the put side. We basically took profits on the put side, and then we sold a new put spread that was at a higher strike. I ended up with the SPX May 9th, 5,500, 5,490. That's a 10Y put spread at the 5,500 level. And I forget exactly what the credit was, but I took that credit and I was able to roll the call side up to 5,800. So now, as you can see on the chart, we're trading at 5,650, which is really right in between the Iron Condor strikes right now. Again, I'm at 5,800 and 5,500. Now that the market has sort of broken the downtrend and we're in a quote unquote uptrend, although there's a lot of, fear out there about retesting the lows and all that kind of thing. Now that volatility has come down just a smidge and the moving averages are back up, we're going to be seeing a lot more of our alpha crunching trades, which I'll show you here in a second. But I wanted to just kind of continue that discussion about, the Iron Condors over the past few weeks. And I'm going to go ahead and overlay SpotGamma's indicators here in my trading view chart. We talk about the call wall and the put wall. These update basically every day if there's changes. And let me try to zoom this out a little bit. The call wall has moved up to 5,800, which is actually where the short strike of my call credit spread is on the Iron Condor. So that's sort of the upper bound, but there are new levels forming, as you can see above that. We got 5,850, 5,900, 6,000. So even though the official quote unquote SpotGamma call wall is 5,800, that doesn't mean it can't move up over time. But I do want to point out just kind of the general range that we're seeing. The put wall is way down at 5,200. I don't actually think that's in play. What's more in play are the levels around 56, let's call it 5,600 and change. We have the vol trigger. So as long as we stay above that, which looks like that's around 56.35, volatility should start to settle a little bit. There's more of a chance that it drifts higher. So we want to stay above the vol trigger. And you can look at these lines as a couple ways. These are major option levels. You can look at them as support and resistance, and you can also look at them as magnets. So right now, if we look at this, the range we're seeing, most of the major positions are between, I'm going to call it 5,900 and 5,650. So we're kind of in the lower part of the range, despite being, overbought or whatever the term is. So that's where these levels are falling to start the week. I guarantee you these levels will not be in the same place at the end of the week because, again, they shift around. But I like to give you kind of a reference. And again, shout out to SpotGamma for making this kind of an easy thing to track inside of TradingView. So let's switch over to the alpha crunching forecast for the week. We did update the way the tool works, and we're going to be focused on the weekly forecast right now. I sent out a pretty good video explaining this and how you can use it. I'm actually going to put a link to that in the description of both the podcast and the YouTube video if you want more details about this particular indicator. This indicator is not on TradingView because it's, I don't want to say it's too complex, but I personally haven't figured out how to do it on TradingView. So it's too complex for me because of the way we do these calculations. But basically what we're looking at is a relatively bullish forecast. We look at the previous month of SPX data down to the 5-minute interval. We average those out for each day of the week, and then we accumulate those into a line chart. And what we're seeing is basically a bullish trend. So it doesn't take a genius to know that over the last month, today is May 5th, the bottom was, what was the low? April 7th. So it's been about a month. So we are now seeing a pretty bullish forecast because that's the data that goes into it. But what I want to do is kind of overlay the previous 2 weeks of forecast. And we can see that the blue is the forecast for this week. And the beginning of the week, the forecast for each of the last 3 weeks is relatively the same. It's pretty choppy, but slightly improving. And then we had end of week kind of fades that were improving and improving. We've talked about that with members and stuff. So even though the market is down today, at least so far, it shouldn't be a surprise that we've had this 9-day bullish win streak. So to get a down day isn't a huge deal. It's really how far down does it go, and we're not even really breaking Friday's low. So this is sort of the pattern, and this pattern is starting to play out, although it's very early. The market's only been open an hour, but I'm expecting Monday to be pretty choppy, potential down day. But what I want to kind of throw out here is the general pattern that I see during bear markets and bull markets. So a lot of times in bullish markets, what you really see, the beginning of the week can be choppy, but the end of the week tends to be stronger. And that's what we're seeing in the week over week forecast here. So if you're interested in learning more about that, check out that video. I'll put a link in the description if you want to learn more about that. So let's talk a little bit about the trades that are on for this week. Part of the thing at Alpha Crunching is we look at the stats and we base a lot of trades off the triumph rates, which is basically how often the market closes higher for a particular day, either 1 day out, 7 days out. And what we're seeing is a few more bullish trades on the board today, for this week. The one trade that I'll be looking to take this afternoon, that's Monday, and that's about the last 30 minutes of the day, is a 7-day call debit spread. We can click on the link here, And this is if our weekly triumph rate is above 50%. But we want to make sure that the market is above the 20-day moving average, in which it is. And then if you're interested, and you can go over to the blog and see this strategy. I'll put this link to the strategy in the show notes as well. You can get an idea of what this setup looks like, the strike selection. But I am looking to go long once again today. Now, I actually am in a losing trade. I know my Iron Condor looks good, but on Friday, we took a three-day to expiration put credit spread because we were just riding the wave and the stats were telling us so. And that trade is not looking very good today. So we have to take our wins with our losses. And I think, as long as we're trading in a small size and you're trading consistent and you're trading in a relatively mechanical way, it's going to win over time. So let's flip over to the economic calendar for the week. First, let's just kind of look at the major reports. We had ISM PMI today. This was better than expected, 51.6. And just, what is PMI? What is ISM Services PMI? It's the level of a diffusion index on surveyed purchasing managers, excluding the manufacturing industry, blah, blah, blah. Above 50 indicates industry expansion and below indicates contraction. So, and it'll tell you that, actual is greater than if the actual number is greater than forecast, it's good for currency. So why is it good for currency? Well, the reason why it's good for currency is, let me get this off of here. The reason why it's good for currency, because ideally, if the market is doing well, they're going to keep interest rates up and the dollar is going to stay strong. If the market's not doing well and we're in some kind of contraction mode, the idea that the Fed would cut rates and print money would be bad for currency in that sense. So not necessarily bad for the stock market, but bad for currency. So these are some little anecdotes you can see if you want to learn more about the actual reports. I'm on a website called forexfactory.com/calendar, and that's the one that I use. So again, we are still in expansion, 51.6. We do have the funds rate FOMC and press conference on Wednesday. So I think we're going to get a lot of noise the first couple of days of the week, but I'm going to go into the report long because the market is up, where the short-term moving averages are up. I think the Fed is basically going to just kind of punt again. However, when you start looking at the data and we have inflation coming down, we have job market is still very resilient. We had a better than expected jobs number on Friday. So as long as the jobs are good and inflation is coming down, if there's any recession or contraction in the economy, the Fed's going to have the room to print and cut rates or whatever easing they want to do. So those are the major reports for the week. I do want to add on the sort of minor ones, if you will, and there's a bunch of little reports. But what I really want you to notice is that on Friday, there is a slew of Fed speakers starting at 6:15 a.m. all the way to 7:45 p.m. I'm counting 1, 2, 3. Let's call it 9 Fed speakers that are going to be adding their comments and whatever. But I think by that time, if we get a move out of the Fed on Wednesday, the move will have already happened, and these guys aren't going to really do that much. The market continues to be, I think, in a tariff-driven headline, and there were some headlines around potential talks with China starting to happen, or maybe a little bit of a thawing. I don't know that anything's really going to come of it very soon, but just the idea, the perception that tariffs aren't increasing and that there is deals being made or negotiations at least happening is enough for the market to keep this rally sustained. Lastly, what I want to leave you with, let's take these levels off, is I'm just going to throw the 200-day moving average up there. And guess what? We are still below. So what does that mean for me? When we're still below the 200-day moving average, I simply trade in smaller size. I'm still trading my mechanical trades, which had been hit or miss, to be honest. It's been very choppy the last, since the correction. But the short-term moving averages are up, but we're below the 200-day moving average. So I'm simply trading my short-term trades, which are both long and short. And I'm just trading in smaller size, and I'm, coupling this for income with some of these Iron Condor trades. One last note on my Iron Condor. Again, I'm probably going to try to get out of this Iron Condor before the Fed. I'm going to see what the profit looks like, if I can get a profit, and we'll see what that looks like. But that's what I got for this week for the S&P 500. I hope you enjoyed the video podcast, and you'll check me out over on Apple, and vice versa. If you're listening over on audio, you'll come check out the YouTube channel. So thanks for watching. Thanks for listening, and we'll see you in the next episode.